Hey, Dan Passarelli here. Well, the S&P 500 closed up 0.6% today, making all-time new highs. SPY closing at 673.11. And here is what has been on my mind today. Question: is this a great time to be selling covered calls? Well, let's take a look at a couple of things here. On the one hand, when markets are climbing steeply higher like this, it can be a little tricky sometimes for covered calls because you have to do some adjustments. Now, doing adjustments are not the end of the world when it comes to covered calls. It's okay. So there's one thing that can be a minor negative, but it's much less of a big deal than a lot of people think. Look at implied volatility. Now, right now we're looking at SPY, but implied volatility is 10 points over historical volatility. That means that options are really, really expensive in SPY, but let's look at some other stocks. Let's look at Apple. Now, geez, it's just a little bit high in Apple, which is actually kind of unexpected, really. Let's look at Amazon. Oh my gosh, it's really much higher in Amazon. Let's look at Goldman Sachs. Oh my gosh, it's way higher in Goldman Sachs. Let's look at INTC. Now we have a volatility mesa here, which if we took this out, it would be down here, and so implied volatility is arguably overpriced in INTC too. Let's look at just one more here. PayPal, same deal. Implied volatility is way overpriced. What this means is that options across the board in most stocks are very expensive. In fact, they're overpriced. But, and you know, there's a lot of times but when it comes to option trading. We have earnings season right on the threshold of it. Earnings season really kind of starts. I mean, there's a couple this week, but the banks start next week. And then after that, it's really go time. That means implied volatilities across the board are higher for a reason. And so we might want to be careful. But all that being said, implied volatility has been high for a while. And so once earnings passes on some of these stocks, it might end up being a really nice time to get into selling some covered calls. Now, there are a lot of stocks like the retail sector, like Target, where they just had earnings about 6 weeks ago. Their earnings won't be coming out for, well, about another 6 weeks. And so that big, massively overpriced implied volatility can lend itself to a really, really nice covered call. And that goes for a lot of stocks in the retail sector. We could look at Macy's as well. We could look at a lot of stocks. And you see, we have that paradigm all over. Now, all that being said, too, while historical volatility is really, really low right now, a lot of times we get that sort of consolidation of historical volatility and then we get a burst. So I think right now, covered calls can be a really great trade, and that goes the same for cash secured puts. If you pick your spots, avoid earnings, and play it smart. I hope that helps. This is Dan Passarelli. Trade smart.